Good morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Thursday morning pre-market webcast. Okay, looking at a daily chart of the ES, and there were only so many times the bears were going to try to push this market down, and these dips keep getting bought, and now what we're seeing is the bulls have become emboldened. If 1460 is going to be solid support because the bears can't get it done below 1460, then it gives the bulls an opportunity to reload, to build confidence, to get the buying power together. And now we're seeing a push to 1476. So we could see this extend up to 77.5. We could see this extend up to 1482. I really don't see much past 82. And if you're not swing short yet, if we start to push into levels around 1482, that's an excellent place to start building a position. Okay, we had a nice little push down lower during the overnight session, and I continue to be swing short, but the reality is, as long as I keep getting 6, 7, 8 handle pushes down where I can cover and then add back on the pops higher, I'm content to trade around this position and wait for the market to do what we all know it's going to do, but it's just going to do it in its own time. The market will not operate on your time frame. Will not operate on your time frame, no chance. So, you just have to, you have to have a plan, you have to execute that plan and manage your risk as you go. So, what am I looking for today? I'm looking to see if 1476 will be the highs of the day. As far as economic news goes, we got Philly Fed at 10 o'clock and leading indicators. So that is Philly Fed typically moves things. So I'll be very interested to see what that does. If Philly Fed doesn't push us to new highs or pushes us up to a situation where we retest 76, then we may be looking at a situation where the bears could try to put something together. But if they do, we're really only looking at a push down to 64. 64 is the daily and 3-day pivot zone. They're basically locked up at 64. And they'll have to get through 64 and through 60 and close below 60. The bears now have to close below 60 before they can start to build any momentum in this market. The ball is in the bulls' court. The bears have had opportunities for the last, you're looking at the chart here. We're looking at the last 1, 2, 3, 4, 5 sessions, and they haven't got it done. So now, the bulls have a chance to run with it for a few more handles. It's a very difficult market to own. It's an incredibly difficult market to buy because every tick could be the last tick. Look at this chart. Okay? So be patient. Manage your risk. Understand that we are extended. At this point, we are 51 handles above the 45-day pivot on peak price. That is overbought with respect to my work, and we are almost 100 handles, not quite, about 75 handles above the 200-day exponential moving average, and we are now 32 handles above the middle band. So we're getting very extended. Okay, have a fantastic day. Mike Vacchi, Princeton Trader from Mr. Topstep. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.